So, welcome to Futures Friday. Great day in the markets. Crude oil hard sell off from our bear line in the sand. S&P hard sell off from our bear line in the sand. Currently holding underneath that bull line in the sand, which we've been talking about. Therefore, it's bearish. Therefore, this big target is in play. Great trading session here on a Friday in late July. That's not something that we get a ton of, so that's a treat. Absolutely good stuff here. Very good stuff. Two announcements real quick before we get started. Number one, people have been asking for this for years. In fact, people have wanted this so bad. I've got some of my traders who created custom stickers and hats and whatnot and have it on their keyboards and whatnot. Well, we have a little bit of merch. I've already ordered myself a couple of things. We got some t-shirts, Apteros t-shirts, hats, a ceramic coffee mug, which I got. So anyways, and you don't have to have it, but we've partnered up with some quality producers to make some nice t-shirts. I think we may add maybe a golf polo or something like that, but rep Apteros, get some gear. It's pretty cool. Okay. Other than that, announcement number 2 is we're doing something we did before. Some of you OG members here are going to remember that one time we put together a spreadsheet and we started putting down the timestamps and the topics of Futures Friday topics, questions that were asked and whatnot. So I have this big vision and I'm going to make it happen, whether or not you guys follow through on it or not. I hope you can. I think that'd be great it's going to benefit you for a couple reasons. But we're going to get this done. We're going to have a vast, searchable faults and fixes library where if you're struggling with trade management, if you're struggling with psychology, and you want some additional feedback that you perhaps don't even know what questions to ask, and you're not getting an answer from the course itself, which a lot of times I'd simply refer people back to the course, but you can't find the answer. You want to go into a topic and take a deep dive around, let's say, trade management or using long-term VWAPs, whatever the case may be. We're going to have a searchable database of topics that are categorized that you can go in and find things. So it's going to be pretty cool. There's so many things that have been said and taught and learned on past Futures Fridays, these meetings, that are just out there. And unless you're going through hours and hours and hours of recordings, it's difficult to find what you need, right? So we're going to make that searchable. We're going to make that accessible. And I'm pretty excited about it. So if you go into the community site and you go to, if you have basic access, it's in the announcements section. Okay. So if you're just like a free subscriber, what used to be a DMI subscriber, you'll go to the announcements section. By the way, you can see like 0.5% of what's there in the community. Some people don't realize that. They think, oh, this is the community. Okay, that's it. There's some recordings and some old announcements. No. The community is a thriving place with people posting in their journals every day and real-time discussions and discussions on specific markets and people talking about crypto and gold and people asking specific NADRO questions with categories for narrative and acceptance and DVA. That's what the community is. So you guys don't actually see the community. So anyways, if you're a free person, it's in the announcement section, Futures Friday recordings. Go find that first post. Go look at the first post. So we have a spreadsheet that anyone can access. In fact, let's do this with a screen share here. And then we'll get to the questions. I'm gonna speed through this. I'm gonna speed up here. Okay, so I'll go to the The real people, the students recordings area. Let's go to Futures Friday recordings. And as you can see, it takes me to the very most recent post. If you only saw 8 posts ago, then it's going to bring you and put you right here. You see this little bar where you can choose what date or what post where you want to be. Let's go back to the first post. I just changed it. We now have this spreadsheet link, and you can go in, and as you're listening to a Futures Friday recording, going back, listening to some archives, open the sheet, say, hey, this is Merritt. And if you're doing it live, for example, some of you might want to help out and do this today. That might be trouble because there might be 100 people that try to do the same thing at the same time. So that could be complicated. But anyways, as you see, there's dates here for all the past Futures Fridays. Say, okay, at, 3 minutes, and 5 seconds, the question was, how can I blah, 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 right? And you can put as much or as little details in there as you want, but just get the topic or the question. And so that we can just figure this out and make it searchable and people can find information that's going to help them. Okay. Let me delete my info here. Cool. All right. Let's get to the question. So Marwin asks, hello, Merritt. Have you considered quantifying your strategies and turn it into a trading algorithm? If no, why not? That's a great question. I really do love that question. Have I thought about it? Have I considered? Have I dabbled? Yes, to varying degrees. But at the end of the day, it's not entirely feasible. And let me say something first before we talk about maybe the whys or different things along those lines. I love that it's not feasible. And why do I love that? Because guess what? I teach people the strategy. And so if it was when an 89 period moving average crosses, or gets crossed by a 21 exponential moving average, we buy, guess what? The edge would disappear overnight, right? It'd be gone. Some, much bigger money than me, collectively, the us, whatever it is, we would arb it away and it'd be gone. And we'd all be competing for it and whatnot. And that's how edges disappear, quantitative ones especially. Nadro, while it's a strategy, while it's a way of generally going about things, it is most importantly framework based. So, for example, I may come in and there's so many different ways to talk about this. For example, we could arrive. We're looking at the my levels and prep and whatnot that I posted, in my DMI pre-market. Go find the video on Twitter. Go follow Apteros Trading if you don't. This is what the Nadro top-down narrative read spit out for me today on a discretionary read. I made choices. I want to place this particular reference from this particular time frame on a higher hierarchy, right? And give it more importance based on what I'm reading here and there. And I'm going to discredit this or that and not look at, let's say, prior value area low as much in crude oil today. Me and a trader were having a conversation around that this morning on the desk. So it's a framework based way of a whole bunch of different time frames, a whole bunch of different references, and you, with your own strengths and weaknesses, get to develop essentially a little niche. Even if you're a straight up Nadro trader, the way I teach it, you're going to develop a little niche within the space that you carve out, that you like to trade on particular timeframes, particular markets or asset classes, and particular references and tools amongst the dozens that I teach. There's very, very few people who say, I'm going to use every single reference that Merritt teaches and use it in every single way that he does and whatnot. Some people do that. Some people erroneously try to do too much of that too soon. and they're just it's too burdensome. They just can't handle it. There's too much dissonance, and they can't do it. So a lot of the decisions we make, while they are based around, for example, our laws of market dynamics and ranking and narrative in order to come up with when and where we see key levels or asymmetric risk reward in our favor, or I should say asymmetric risk reward skew, um, it's kind of up to you and how you want to do it. I teach you ways of doing it. And even for people who do it exactly like I do it, there are times where we come up with slightly different things, but then when you get down to the nitty-gritty of execution and timing those trades and placing a stop tightly or loosely, or scaling in, all out, or scaling out, it's just pretty rare that all of us are doing the exact same thing at the exact same time, and that's a beautiful thing. It prevents the edge from just getting arbed away, and it prevents it from being this cut and dry black and white quantitative thing. And I love that. I think it's very important for the longevity of this. And another reason that it's important for the longevity of it is because it's based around what I consider and what many, many, many people consider to be essentially universal truths around auction markets, the way markets behave based on the fact that it's crowds of people. Is artificial intelligence going to change that? We'll see. Hang on for the ride. Who knows? We will make hay while the sun is shining. Do edges, do all edges that have ever been created last forever? No way. Is this one a really, really good one? Yes way. So, anyways, Marwin, I think that's a great question. I've talked down a couple rabbit holes here. There are things that you can quantify. This is also one of my favorite parts of trading, is building little tools, building little ways of using quantitative information and alerts and tools and indicators to help me do what I do better. That's pretty cool. I've got all kinds of traders, desk traders, all kinds of people who go down that route. And while you don't just press turn on the system and let it go, maybe you have a fully quantitative execution model that you run, but it's discretionary based on your read of whether you want to turn on the long model or the short model, and when and where to turn that off or flip it or go to no model, right? You're like the main puppet master, and then you let the execution be quantitative, or vice versa, right? There's so many different ways to do this. It's amazing. Okay. Oh, I forgot to hit the answer live button. There we go. Answer live so you guys can see the question. I'm sorry. I figured that out to do that last week. All right. Luis asks, hey again from Portugal. 5 stars to the DMIs this week, even better because finally understood where the levels came from. I have tons of questions. Hopefully one day be a part of this community. Still so much to learn. Do you still use a chart with Heikin-Ashi candles or just a zigzag study? In which chart? I'm personally currently not using Heikin-Ashi at all myself, nor a zigzag. So those are tools that are great for helping people see the things that I want to teach them to see. They're not necessarily something that has to be an integral component of Nadro trading that you use forever. Zigzag helps you see rhythm. Heikin-Ashi helps you see momentum shifts, period. Number 2, you said once at Futures Fridays, you want to form an Olympian performers. What is for you an Olympian performer in terms of stats, in terms of mental framework? Um, you know, the stats are going to look different based on the niche and the style and the time frame. Okay, but I think in general, you end up with people putting up um, skewed risk reward in their favor, right? Risk adjusted returns. I don't care if it's someone with a low win percent that hits home runs and they're able to tread water, hit a home run. Our last trader that we're going through the funding, process and bringing on board to the team, that's what their tryout looked like. At first I was not so happy about their performance, even though they passed it. We're not going to tell them, hey, sorry, you passed it, but it's not good enough, because that's the parameters. But the more I looked at this person's trading, I see key areas that we can help them improve what they're already doing. And I see that they have a lot of really great qualities that allowed them to tread water and then hit some bigger days. So I don't care if you're like that. I don't care if you're the person who has a higher win percent and a lower risk reward. I don't care. So in terms of stats, I'm not trying to pigeonhole anyone. I think a lot of classic NADRO traders, people who do it very similarly to the way I do it, I think win percent in the 40s and risk reward, average risk reward, including partial scale outs and whatnot, which reduces your risk reward the way it looks at the end of the trade on a flat to flat basis, averaging better than 2 to 1. Right? So that's a fairly, it seems like a thin edge, but there's people who really make a lot of money with 45%, 46% win percent and a little better than 2 to 1. Sometimes being like 3 to 1 and whatnot when they're having a really good stretch. Sometimes having their win percent in the 60% when they're having a really good stretch, right? So, in terms of mental framework, mental toughness, having being creative, being curious, asking intelligent questions to yourself and to others, having mental toughness and cultivating that, and a high degree of self responsibility. Those are things that come to mind, beyond what I teach in terms of mental framework and um, the things that you need to think differently about markets and trading in order to begin to see more objectively and not make the same mistakes as pretty much all natural human traders make. Okay, JK asks, "Hey Merritt, are relative volume and heat map essential for your trading, or are the higher time frame VWAPs, daily VWAPs, rhythm, market profile, volume profile, cumulative delta enough?" Those things are definitely enough. Volume can be a helping factor. A lot of times cumulative delta in particular can be a form of a read on volume. I know it's not necessarily outright volume, but if you've got a market that's trading high numbers in a cumulative delta, or a market that the slope of the cumulative delta is very aggressive, more times than not, you've got a lot of volume coming in, right? And it's one-sided in fact. So, there's a difference between high volume and churn or chop, and high volume behind directional movement. So anyways, I am a big fan of relative volume. I think it's great. I think it can tell you a lot of things about the shorter term conditions and aptitude of a market at any given time. Um, a heat map, zero. Of like, when I think of a heat map, I'm looking at like what stocks or sectors are up or down. Non-existent for me. And I'm not saying there's ways that people can't use that, but not something I use. But relative volume, especially when you break it out like I do on this chart we're looking at here, this is relative volume. But it's by time slice of day, right? If we just look at volume or relative volume for the day or whatever, that tells us some information. Volume tells us the least amount of information. Relative volume as a cumulative total for the day tells us a little bit more information. And I think relative volume bar by bar for that time slice relative to that time slice on yesterday and the day before and the day before and the day before averaged out, I think that tells us something even more. So up to you and how you use those things. 6S. Hey, Merritt, you were mentioning lately that you'll be trying stops that are not so tight. Does this mean that you are not putting them just above the swing high or low, or something else? So right now, right now it depends on the situation. There's some situations where I'm saying, okay, especially during what I consider rotational markets that I'm fading a shorter term edge of and whatnot to get me involved with a bigger picture narrative. I like to kind of give myself a little more room and maybe break apart the entries a bit. That is something that I'm experimenting with and have been experimenting, quite frankly, for a long time. When it's more of a clean momentum imbalance type move, I've kind of stayed, or at least maybe gone back to. I'm not sure how to put it. Um, I'm currently of the mind that tighter stops are the best thing for me because I don't want to get into a situation where all of a sudden momentum's shifting against an imbalance and I'm putting more of a position on it. Just doesn't make sense to me. So I'm treating different intraday conditions, as we call them, differently in terms of uh, entry. uh, Kulu asks, could you please talk about the use of springs and upthrusts for entries assuming nadro framework is met? Sure. um, the concept is really simple. So anytime I'm going to draw on this chart here, guys. So anytime you have a swing and you have a run above that swing, there is a form 100% of the time people are getting stopped out. I'm happy to say that's 100% of the time people are stopping out. Okay. It may not be everybody, it may not be enough people. There may be many, many more stops for other contextual reasons all the way up here, and the market wants to go there, right? So there's a lot of factors here. So we're simplifying it into just isolated this short-term time frame, or whatever time frame. Actually, it's one time frame. We're not doing multiple time frame analysis here. We're not framing context. So anytime you run beyond a prior swing that's above or below, there's a form of a stop run, which is a form of an inventory clear, which is a form of, in this case, people who were short no longer being short. People who, another thing that happens is that people who are interested in breakout trading are getting long. There's a million different people participating in markets, and you can betcha that some people somewhere are seeing this as a breakout and getting long. So when this fails, which is now completing what we call an upthrust pattern, just flip it upside down for a spring against a prior swing low, there's a dynamic here of market participants in which inventory was cleared out of prior shorts, and they may look to reinitiate those positions, which are going to put downward pressure on that market, whether it's passively or aggressively. And those fresh breakout traders longs are now wrong, and they're going to be stopping out typically aggressively in terms of hitting bids here. And that is going to fuel, again, this market towards the downside. So that's why it's a good pattern, because there's multiple market participants who have essentially are going to help this trade give us better probabilities of working, at least on a short-term basis. How good of a job you've done at selecting that pattern within a landscape of risk reward, within a contextual framework, that's going to determine the better ultimate bigger picture success of the trade. All right, what else we have? Kulu with another question here. Kulu with about 4 more questions. We're going to skip you, Kulu, after this one. For the DMIs, is there somewhere in the community where you say what the levels were or are? I think it would be useful for new students. Any time. So no, I don't, because I don't teach what I do for nothing, right? Because now everyone in the world can see the DMIs. So no, that's not somewhere, and it's not something that I do on a daily basis for students, because bear with me here. You're going to get any and every answer you ever want, okay? But bear with me. I don't do that because you should be able to determine what they are. You should be. And I know you're saying, you're a new student. I don't recognize I recognize your name from this webinar, but not as a student. It's You should be able to come up with what the levels are. And most traders can. If you cannot, you can ask in the real-time room. You can ask in the NADRO section, in the narrative section. There are outlets for you to get those answers. Okay. So just speak up. It shouldn't be every day and every reference that you're trying to figure out. Okay. If that's the case, you just didn't nearly grasp the concepts that were taught in terms of the references that we use. Now, be careful. Some of the references are dynamic, so they change throughout the day, especially the shorter term ones. So they'll be a little bit different than where they were maybe when I posted them at the open. So take that into consideration. But go back to the open and look at where everything was then and what I posted at that time. But you'll get it, and you have the help you need. You can get those questions answered. I'm sure you're a smart enough dude that you're not you can't figure out what each of them are. So on the off chance when you can't find them, just ask. You'll get the answers. Okay, Swad asks, could you walk through the trade management for the DMI today? How would you have managed the risk if you got short at the upper zone, 43.64? That was our bear zone. Stops, targets, how you manage once the bull zone was hit at 48 to 52. All right. We won't go into all detail here because, again, different people have different approaches. But the classic approach, if you had gotten short at this upper area here, would be to initially take a scale, probably here, probably into VWAP. This is also, prior value high and whatnot. So it makes sense. The delta was pretty strong coming into the open, so it also makes sense to take some profits here. Granted, this looks like some pretty good momentum that's coming in directly from a bear reference. Still, the scale makes sense. Okay. Right into prior value, right into VWAP. The next place is at our opposite extreme intraday, which is confluent with our bull line in the sand. It's up to you. Now, I'll tell you, the bear zone comes from a higher time frame than the bull zone, so it gets a little bit more weight. The green zone gets a little bit more relevance. I give you guys know I've been talking about this big downside potential in the S&P, right? It hasn't played out, but it's good to put ourselves in position, including yesterday with the ad. I think that was the S&P, was it? Yes, it was. Where was I? So for me, the bear references, including the higher, and our hint highest of time frames, they're more bearish. I know they're in a bullish condition, but they're bearish in terms of where they are trade location wise. So to me, this gets a little bit more weighting. So for me, it makes sense to hold a core and at least see what happens here. If you see a big reversal on the tape and stabilization here, then exit the core position. You've already taken at least one really good scale, if not a second really good scale right here. Okay. Depends on how many lots you're trading, obviously. A lot of you are in the micros, so you can trade 3 micros. It's not a big deal. So the stop was above the swing. The stop still has not moved even to this point in time. I would not move the stop until we clearly get this contextual shift and we go to a downtrend intraday. And at that point, you could place the stop somewhere around this area. If you hadn't taken any scale into this area or whatnot, here we are in a pretty large extreme intraday. This is a place where, we're capitulating, capitulating volume wise. Cumulative delta is cracking. It's not going to be sustainable. It's very bearish, but it's not sustainable. So this is a smart place to scale. I'm giving you options here. Okay. Here's where I had a lot of traders initiate fresh shorts if they had already flattened out, or if they had done stupid things like some of my desk trader or one of them and tried to get long up here, if you can believe it. Here's where some of them got short. Some of them held for quite a long time. Some of them got stopped here, which makes sense. Intraday, we're failing to hold a downtrend. But that's why you screw your day up when you screw it up here. If you're in from here, you can maintain a more flexible stop, and you don't have to risk giving back P&L if you're short from here or if you're short from here. Okay, both of these were valid short opportunities. Here's where we start to get some dissonance with our intraday framework. So I don't see this as fresh opportunity to initiate shorts. I only see this as a way to hold a loose leash core position if you got short initially. And if that's the case, final core position, we know that we're holding for this. Hope that was helpful. Sorry, guys, we have a lot more questions here, but that is all the time that we have. Um, Awesome. Remember, we're coming out with some Apteros swag. Check it out. Stay tuned for that. Remember, as you go through and listen to recordings of Futures Fridays, and you're probably going to see, by the way, Bryce, you're going to see a little bit more press here, order flow wise, and we know why that is. It's not finished here. Whether or not it goes down or not, absorbed or not, who knows? But we're going to see more of a press, most likely here, probabilistically speaking. And yeah, as you're going through Futures Fridays recordings, jot down the topics with a timestamp. Let us know you're contributing. You can put your name or your username, whatever there. That's just going to build goodwill with you guys. And I don't know, maybe we'll throw out some something, maybe some Apteros credit, maybe some merch, something to people that we see are really helping us out with the categorization of the Futures Fridays. Cheers, guys. Have a great weekend, and we'll see you next week.